Okay, so I'm here at the office, and wow, are the markets going crazy again? I had this really cool thing I was going to do. I was going to do a screen share and show you some different things of what's going on. I can't get my computer works. Seems like all these systems are overloaded right now because so many people are using them. So I do want to explain though, we have rates now over 5%. I was looking in Bank of America's site and SunTrust and everyone's, and for refinances, they're well over 5%. I have this really cool program where I can pull up every bank and it can give all their pricing, take out all the fancy footwork and the marketing and all the things that people do to try to make rates look lower than they are. And man, across the board, rates are kind of getting to an all-time high. And how could that happen, right? Like, that's the question I've been getting from real estate agents, buyers, and I do want people to understand kind of what's going on. Like, how did literally 4 weeks ago we were quoting rates in the mid to low threes, and now we're up over 5%. And if you have a low credit score, low being 680, which is not that low, you're in the mid fives. And if you're buying an investment property or any of that, those rates will even be higher. So what happened? So basically, the Fed cut the Fed funds rate, which is the overnight rate that banks borrow money, not interest rates. The Fed or nobody controls the rates as far as the actual interest rate. It's a free market, and this is where people, I think, get confused. So it lowered the rate at which banks can borrow money at. It also started doing quantitative easing and buying mortgage-backed securities. And then on top of that, it eliminated the reserve requirements for the banks. All that is a lot of stimulus that would normally help rates. And then in general, when there's a lot of uncertainty, rates actually tend to improve. Like when the stock market is going down, there's usually a converse relationship. Well, a couple things happened that were unique, and I've been doing this 18 years, and this is definitely unique, is that the Fed is basically, so the government, they're creating all these programs, and most people understand free money is not really free. The Fed has to raise that money. How they raise it is they start selling treasuries on the secondary market. Well, it's simple supply and demand. If you're selling a ton of supply and the demand is going down, that's going to drive yields up, which makes rates higher. And then on top of that, Secretary Mnuchin under Trump was saying that he expected unemployment could be as high as 20%. Now I don't believe that, because during the Great Depression, the unemployment was like 25%, and during 2008 and 9, during the mortgage meltdown, the Great Recession, rates were about, or unemployment rates were about 10%. So unemployment rates are going to skyrocket because companies are laying people off in record numbers. So what's pushing rates up? I had a friend of mine, we were talking, he's a financial advisor, all markets, gold, silver, stock, bonds, you name it, they all try to price risk into their price, which is why sometimes when the Fed cuts rates, the Fed funds rate, which does usually help lower rates, that gets priced into the market months before they actually meet, right? Because there's an anticipation of what they'll do. Well, right now, nobody knows what's going on. They just know that the Fed's getting ready to print a ton of money. I think they're going to buy $70 billion worth of treasuries today, and they're buying another 30 billion or so mortgage-backed securities. So just like the stock market is kind of whipsawing around trying to price in this risk, trying to create a new bottom, right? Right now, the Dow's under 20,000, and it's trying to figure out where that bottom is. Rates are the same thing, and a lot of banks are just bailing out of the market. They're just pricing themselves out. So right now, rates are super high. So what does that mean? What do you do with that? So if you're buying a house, it is an issue, truthfully, because rates are going to be, potentially high when you need to close, and you're under a timeline on that. Now, the good news is, if rates are 1% higher, it's usually for most people $70, $80 a month, depending on the purchase price, maybe $100 a month. So yes, it is higher, but for many people, that won't keep them from buying the home. And most lenders, you have to make 6 payments on time, and then you can look at refinancing, and your lender, loan officer, whatever, can kind of talk to you about that. So you don't want, in my opinion, you wouldn't want to not buy a house because rates are high. I mean, my dad had a 13% rate when I was first born, actually through the VA. So rates have been much, much higher over the years. So when I say they're high compared to where they've been. But it is stressful to buyers where I had a couple people freaking out on me, truthfully, where I hadn't talked to them in a few weeks, and we were talking about one rate, and now they're talking to me today like, what's going on? And it is confusing to buyers. So what do I think is going to happen? I think in the short term, this could go a little longer, because think of it as if they can't price the uncertainty into the market, meaning the government is giving information, but they're kind of saying, we don't know. We're going to do these things until, as long as it takes to kill the virus. And regardless of anyone's opinion on everything that they're doing, that uncertainty is going to continue to get priced into the market until people feel like that there's some kind of handle on it. Now, what I believe will happen is all the Fed threw the kitchen sink at trying to get rates lower, and right now the market's just not helping them. It's not doing what they thought. And if they weren't doing what they were doing now, rates would be, banks would be shut down. The rates would be so high. So this is helping. And I think as we get past the virus, past these times, rates are going to stabilize and head probably to really, really low rates throughout the year. I just don't know when. I don't know when that's going to happen. And I don't know how that it's going to affect things as far as buying all these bonds, buying all these mortgage-backed securities and treasuries. All that is going to have an effect. I'm not an economist, but I've read enough to know all that is worrisome about what's going to happen. So I don't want to make the video too long. So I just want to say, yes, rates are high. I believe they will come down. People can refinance down the road. You do usually have to make 6 payments to be able to refinance, but truthfully, you'd want to anyways. You'd want to wait till the end of the year and let rates trickle down to where they potentially could be, in my opinion. And for now, if you have any particular question, I'm going to put some links in. I'm going to put this on YouTube for some of the programs I see coming out to help homeowners, as far as stopping foreclosures and stuff like that you might be interested in. And more importantly, just have any question, give me a call. I'm working with a lot of real estate agents right now, a lot of buyers, holding their hand, having conversations, and doing the best that I can to explain really some unprecedented things that have happened in my mortgage career. As far as the rates, the chart is just amazing. I wish I could have showed it. So for now, yes, rates are high. I know that's not what a lot of people's expectations are, but that is the truth. I don't expect that to change like next week or something, but I do think that will change over time. All right. Have a great day. Make it a great weekend. Call me if you need anything, and I'll talk to you soon. Bye-bye.